What's up, guys? I'm about to share with you exactly what is creative finance. Now, whether you've never heard of creative finance or you're very familiar with it, even taken a few courses, you're not going to want to miss what I'm about to share with you. In creative finance, I like to break it down. Simply put, whenever you and a seller of a property agree to take payments over time, you agree to send the seller payments, they agree to accept them. Now, there's a whole bunch of ways to structure this because some houses have mortgages. Actually, a lot of houses have mortgages. Most have mortgages, and a substantial amount are free and clear. Regardless of whether there's a mortgage or there's not a mortgage, regardless of what that debt looks like, there's a way to structure it where you can make payments over time to the seller nearly always if the seller agrees to it and is in the position to do so, and it's a win for you. So creative finance is whenever you make the seller or their lender or however it is a payment every month. And in something I love about creative finance, I was 21 years old when I started in this real estate investing business, and it gave me the ability for unlimited growth. You know, the first challenge I remember encountering whenever it come to trying to get a bank loan was the fact that I was 21 and didn't have a lot of credit history. Banks wouldn't loan to me. My score was not fantastic and my history was very short, so I was unable to get qualified for that loan from a bank, except I was able to go to sellers and talk to a lot of sellers and get a lot of no's, and eventually found someone who said yes, they'd be willing to sell me the house, and if I could put a few bucks in their pocket, then they would be willing to just let me cover the payments to the bank, which, by the way, in this market is quite appetizing with the fact that there's a lot of 3 and 4% mortgages to be covered out there. And that is a way that you can absolutely grow your portfolio. So when it comes to creative financing, exactly how does that happen? Well, number one, it takes us having the knowledge of how to get creative finance. You know, the better you get at asking the questions, the better you get at presenting the opportunity and showing the seller of the property how it's in their best interest when it is to take payments over time, then the more deals you're going to get. In other words, if you're not great at explaining it, you may have to talk to hundreds of people to get somebody to say yes. And the better you get at explaining it, the less people you have to talk to until you get to a yes. And then in my scenario, of course, I get a lot of people calling me wanting to sell me their house, which in that case doesn't take but a handful of people that I talk to in order for somebody to say yes, happy to sell us their house, and for whatever the situation is, we make them a payment or their lender a payment, cover their payment, whatever it may be over time until we pay them off. So number one, unlimited growth capability. Number two, doesn't require you personally guaranteeing debt and filling out personal financial statements and seasoning the loans and praying that a bank will give you a loan, and after you get a property, waiting a year or two to season that to go get another one. Grow at will. Buy a house a year, you can buy a house a month. You can do like I did at 22 and buy about 50 houses in 52 weeks, so almost one a week. So I share that because creative finance is a way for unlimited astronomical growth. Creative finance, again, can be done on almost any property, and it's you and it's the seller agreeing on terms. So what are the terms? Well, there's a few pieces that come into play there. And again, as investors, as real estate investors, we don't make offers. We ask the seller questions, and remember this, we solve challenges. So I ask the seller, what is the price, the least they'll take on price? If I make them a monthly payment until I pay them off in full, what's the least they'll accept on a monthly payment? And there's a lot of cool wording and phraseology that those of you who work with me one-on-one know that I ask to delve down to the best deal possible. And at the same time, it's simple. What's the least price? What's the least on the monthly payment? Of course, we want to get little to nothing down. And then when it comes to the time, if there is going to be a length of time of which we pay them off. So those are the bullet points. Those are the keys in creative finance. How do we make sure that the seller is set up to get what they need, and we as the investor are set up to also make a profit after we buy the house? Because believe me, if the seller wins and you don't win, you'll be a not-for-profit business and your business will suck. If the seller don't win, but your business makes a lot of money, well, your business probably won't be around long because your customers won't be winning. But if you sellers win and you win and everybody wins, now you have a sustainable business model where you can continue to make a lot of money for a long time to come. Now, the cool thing about creative finance, Whether you're buying a house, whether you're selling a house, or anything in between, all sorts of ways to structure this deal. But again, to not get into the weeds, send the seller or the lender a check every single month until you pay them off at agreed time in the future, and you, my friend, have got yourself a creative transaction, a creative deal. That is what I love about creative real estate. That's just scratching the surface in this short video for the sake of time today. So much more. Hit that like, subscribe, and follow button and see future videos going even deeper.